E-mini S&Ps shook off some early selling in the overnight session to rally and actually starting to look very positive, continuing with that bullish momentum. Not quite at those all-time highs yet, but certainly very close. As we look over in the bond market, we're seeing that the virus woes continue to kind of plague and seeing buyers come in and yields going down. Not so much in equity land. Equities continue to push higher with the maybe a little more optimism than we're seeing in the bond market. And right now that bullish momentum that we've been seeing going back as far as you want to look continues to dominate the equity market trade. So whether it's fear of missing out, whether it is some kind of other buyer beware, they are coming in with both hands and they are lifting equities here, and will continue to do so, as it is the one game that has continued to pretty much just trade in one direction. Yeah, we've had a few hiccups here and there, but nothing that's sustained, and equities continue to push higher. The VIX index, which saw its biggest move in a long time last week, actually extended some of that north of the 15 level. It did back off towards the end of the day as equities went higher. Obviously, it's a very directional trade. Equities go up, VIX goes down, but it does remain elevated. We're not on that 11 to 12 level that we've been looking at or kind of hovering on when equities are making new highs. And right now we are nearing those highs, and the VIX index remains elevated. We have seen a buyer come in of some pretty far away calls. The 125 calls in the VIX index have been purchased over the last week and a half or so in abundance, but we have not gotten there yet. And obviously that's a very much an insurance trade. Volatility remains elevated, but not on the highs, and looks to be creeping lower as we push towards those all-time highs in the underlying indices. Lastly, what do we have this week? Well, Mr. Powell's testimony was released to the market last week. He will speak to Congress. I don't think that's going to have a major effect on equities here. Obviously, the Fed's going to keep rates low, and as long as they don't start hiking where they are right now, keeps equity markets fueling money into the equity markets. We will continue to watch the coronavirus, which will continue to dominate headlines, similar to what we saw with the U.S.-China trade. Now it's the coronavirus, which obviously continues to plague markets. We're seeing a little more caution in the Treasury market than we are in the equity markets. However, we will see markets ebb and flow as those headlines come out. And lastly, earnings will continue to come out. Yeah, it's been a pretty good earnings season so far. And I think at this point right now, earnings can only hurt what we've seen here. If we get some real negative numbers, yeah, that could pull things back slightly. But those buyers are waiting in the weeds, and they will continue to bid this up until there's a reason not to. And at this point, the Fed's kind of on the sidelines, and earnings are kind of give and take. So it really becomes more of a risk factor. How much of this coronavirus will risk global growth? How much of this coronavirus could risk central banks having to step back in to kind of hold up the markets? We don't know the answer to that yet, but at this point, the equity markets are shaking off any of those woes with a lot of optimism as we near the all-time highs, despite the fact that bond yields continue to creep lower.